Welcome to the Macro Show for May 19th, 2025. Back in the grind, we have a debt downgrade for the U.S. sovereigns. That's the macro tourist headline of the day.
Admittedly, I was a little surprised. I mean,
you go to Mexico, they downgrade the debt?
It's just like, thanks for coming out. Like the next time anybody tells you Moody's is the forward-looking indicator for markets, I don't know. Just what it is it represents everything we've been talking about. The manifestation of the machine, AI, clickbait, macro tourism, hooking on to everything, and mainstream media, really operating a lot of these clickbait machines, really running with whatever they can find. Okay, so don't get upset about it. Actually, get really excited about it. This morning, you should be really excited because there's a lot to do on this. Again, fading the machine, in particular in the chop bucket. Fading meaning trading, taking the other side of a lot of different things, including positions that we're properly positioned for. So we'll start with that with the dollar. We'll hit on that. We're also properly positioned from an interest rate perspective. And I think that a lot of this actually, Jonesy, has to do with how the options market was positioned coming in and out of options expiration, which has obviously nothing to do with Moody's downgrade or otherwise. First on the dollar down, that's the way the market's going to talk about this. If you're a tourist, is that bond yields are going up, the debt is going to blow up America. I mean, by the way, bond yields have been going up for like 3 straight weeks, and the dollar's been going up for 4 straight weeks. We are short the dollar, so that's good for us this morning. I will be covering some of that position. I might sell all of my euros if they make a lower high. That would be counter to what I generally do, but maybe I will. Maybe I mix it up a little bit this morning like Paul Maurice did last night for the Panthers. Mix up the lines, play with them. Play with the minds of the people that can't handle it. I can teach you the process as well as I can possibly try. But again, what we do have here is a higher low for the dollar on the risk range, and we have a lower high for the euro on the risk range. We have a lower high for gold. So the other thing to do this morning, like I said, there's a lot to do. I might sell half of the gold that I have left because I have 2 different asset allocations to gold. We'll see about that. We'll see where the signal takes me today. That's ultimately what I'm thinking because that's where the signal is at currently. But we're going to have to see about that. You can see the US dollar index. The trade versus the trend is really coming into this was the setup, don't forget. 4 straight weeks makes it immediate term trade bullish. But on the trend, which obviously the dollar has been down in the last 3 months versus the euro on the order of 6.2%, and the pound over 5%. Don't forget the US dollar index itself, as you just saw, in the last 3 months. That's the trending return, is of course been down over 5%. So again, that can come and go. Is this the beginning of the end?